Hello, dear traders. The US stock market closed last week with heavy losses for a few reasons. First, the US reported on another record CPI in January. Second, escalating jitters between Russia and Ukraine are sending shockwaves across financial markets. Now let's discuss what market sentiment is being shaped in the face of a full-blown military conflict in East Europe, fears about the Fed's policy moves, and amid the empty economic calendar. No doubt, market sentiment turned sour in light of the fresh inflation report, with the CPI at an annual 7.5%, the strongest level in 40 years, as well as escalating geopolitical tensions in East Europe. As the result, the Dow Jones closed on Friday with a 1.4% fall. The Nasdaq was 2.8% down, and the S&P500 shed 1.9%. Besides, on Friday, the Federal Reserve announced that it would hold an emergency meeting on Monday, February 14. The policymakers are supposed to run a closed-door meeting with a focus on raising interest rates. The regular policy meeting is slated for March, so the market is pricing in the first rate hike next month. Back to the stock market, futures on the S&P 500 hit an intraday high of 4,425. Meanwhile, they are trading in the corridor between 4,360 and 4,460. Nevertheless, the downward move is interrupted by escalational zigzag. Today, the index is still trading in the red at about 4,417. The US dollar gained bullish momentum against rival currencies at the end of the last week. Record inflation in the US and sharp fall on Wall Street propped up the greenback, though it developed a modest growth. Perhaps market participants reckon that the Fed Reserve will hardly venture into a sharp rate hike. On the other hand, some market players believe that the US Central Bank will resort to aggressive tightening with a rate hike of 50 basis points at a time. Now, investors are anticipating the minutes of the Fed's policy meeting, which is due on Wednesday. The US dollar index remains at elevated levels against the basket of 6 major peers. The index has retreated from an intraday high of 96.32, trading a bit lower at 96.12. The outlook is bullish. The expected corridor is defined between 95.70 and 96.30. The USD CAD pair is poised to climb despite rising oil prices. Crude oil spiked on Friday amid a decline in stock market. For the time being, oil is trading at annual highs, thus supporting the Canadian dollar. The ambassador bridge, the busiest border crossing between the United States and Canada, reopened after police had cleared protesters on Monday night. Truckers vented their anger against COVID mandates, so-called Convoy of Freedom had blocked the gateway between the United States and Canada. The USD CAD pair is set to trade quietly today after a series of sharp price swings. The currency pair is now trading at nearly 1.2745. The pair is expected to trade in the corridor between 1.27 and 1.2780. Last week, Bitcoin surged to 45,661 after a promising spike, the digital token to again trading lower. The most popular crypto got stuck below $40,000 for about a month and eventually climbed above it. The crypto market is trading cautiously amid expectations of a rate hike by the US Fed, turbulent stock markets, and the firm US dollar. Analysts at Wells Fargo said that the recognition of digital assets as mainstream investments is still on the early stage. They say the crypto is going through the same stage as the internet in the 19th. So the Bitcoin is yet to be accepted by the global financial community. The flagship cryptocurrency opened a new week with a slow decline to the same support of $40,000. It's unlikely to trade on the seesaw today. The corridor is seen between $41,681 and $42,378. And this is all for today. We wish you a happy Valentine's Day. Our team wishes you lots of love forever and forever. See you tomorrow on InstaForex TV channel.